This morning, governments around the world are struggling to contain the crisis, and fear and uncertainty is wreaking havoc on the global economy. In the United States, the Trump administration is still trying to ramp up testing as the number of cases jump again over the weekend. Here are the latest numbers. Again, we would know more if they would test more. 565 confirmed cases in 34 states and Washington, D.C. The number of confirmed cases doubling since Friday. 22 people have died nationwide, and health experts again continue to warn as people are actually able to get tested, these numbers will continue to rise. With that in mind, CNN is now referring to the outbreak as a pandemic. We're going to have more on what that means in just a moment. But first, we have to talk about the financial impact of all of this and what we have been seeing this morning. It's already proving to be a brutal day on Wall Street. The Dow, as you can see, down 1,700 points right now. Trading was halted this morning after a steep drop in the S&P 500 triggered a so-called circuit breaker minutes after the trading day opened, helping to drive the anxiety. Oil prices are collapsing. We have folks covering all of these angles for you this hour. Let us start with CNN's Allison Cossack. She's at the stock exchange. She's joining me right now. Allison, you were there at the opening bell this morning. You saw it all play out. How bad is it? What are you hearing right now?
Well, amazingly, we are seeing the Dow off of its lows of this session. We did see the Dow down as much as 2,000 points. So what you're seeing now is more orderly selling. Earlier this morning, a dramatic scene as stocks really fell quite quickly, and that is why we saw the circuit breakers kick in. Stocks fell too fast and too far, and stocks stopped trading for about 15 minutes, kind of giving investors and traders a moment to collect their thoughts, let cooler heads prevail, and they can assess their positions. That works because we did see stocks bounce off their lows. But why did they originally panic? Part of the panic was because of what you mentioned, oil prices crashing over the weekend, tumbling 30%. That really spooked the markets because that could have a real ripple effect throughout the economy. That creates that layer effect of fear that already existed because of the coronavirus, the uncertainty about how much of an impact the coronavirus will have on the economy, and then you add that layer of crashing oil prices and how much that could hit the energy industry. The worry is there that could create possible bankruptcies, that could create job losses, and you can see that ripple effect throughout the economy. So that all spooked the market, causing that that tumble this morning. Kate.
Allison, thank you so much. So a major wild card for the markets today, oil. An all-out price war between Saudi Arabia and Russia causing crude prices to plummet. Let's get over to CNN's editor for emerging markets, John Defterios. He's in London. He's been watching all of this. Okay, so John, the oil story, the oil element to this huge story, what is going on here?
Yeah, I tell you what, Kate, you almost have to rub your eyes and see if you're reading the numbers correctly. When I was going to bed here in London, I looked at the Asian market open, and we saw a drop of 25%. I mean, oil usually moves in increments of 1, 2, on a radical day, 3%. This is a perfect storm, and I'll explain what I mean here. The coronavirus has undermined demand for oil and gas around the world, particularly in China. We've had way too much supply hitting the market over the last 2 years, led by the U.S. shale producers. U.S. production at a record 13 million barrels a day. And then we had the two largest exporters, Saudi Arabia and Russia, at the so-called OPEC Plus meeting in Vienna, where I was covering it, with very different views of how to solve it. Saudi Arabia is trying to get all these 23 producers in Vienna to cut more supplies right now to lift up prices around $50 a barrel. Russia's basically saying after the last 3 years of this collaboration and cooperation with OPEC, we're tired of making space for the U.S. shale producers, so we're not going to sign on the bottom line. So what did Saudi Arabia do? They doubled down. They said they're going to raise their production, and over the weekend, get this, Kate, they're cutting prices by up to $7 a barrel. It's radical, something we haven't seen since 1991 in terms of the drop. And we have to start thinking, as Allison said, the implications for the U.S. energy basins of the United States, which employ 10 million people right now and have had a terrific 10 years. It's going to be painful for the next 2 or 3, it looks like.
Yeah. John, thank you so much. Please keep us updated as things are changing very quickly here. Joining me right now to talk about all of this, and there is a ton to get through right now. CNN business editor at large, Richard Quest, is here, and of course, Christine Roman, CNN chief business correspondent. I would like to know where you want to begin. You were saying to me this morning, This is not a redux of 2008. Why is that?
Very simply because the financial system is in a much better case. Why? I remember reading an Economist headline once, or line saying, "Why are we bailing out the banks? We bailed out the banks in 2008 because we needed to. They were rotten. The rot had got into the foundations of the economic system. Banks are better capitalized, tier 1 capital ratios, everything about them. They're profitable. This is not 2008 again." It does nor does it have the potential to have the effect of 2008, because the banking system in the United States and most of Europe is solid.
It is the biggest test of the market since 2008, though. I mean, when you look at kind of the strain overall, the oil price declined at the same time as the stock market declined, and the uncertainty over coronavirus.
And Christine, of course, it is clear that fear and uncertainty have now set in. That is part of what we're looking at and part of the reaction here. But I looked at the president's Twitter feed, and it looks like the president is afraid as well. If you look at the tweets of what he's been putting up in the last few minutes. One, he's saying that it's good for the consumer. Gasoline prices are coming down. And then he blames Saudi Arabia and Russia arguing over oil, and also the news media for a reason that the market is dropping. You've been talking to investors on the impact of the president in all of this. What are you hearing?
So I ask everybody I talk to, what about the tone from the White House? Is that helping or hurting? And they say it's not helping. The president, in one of those tweets, downplaying this, saying, look, we lose 37,000 people last year because of the flu, and we don't close stores and tell people to go home. So what does he say at the end? He says, coronavirus, the 22 deaths. Think about that. Well, he's again at odds with his public health officials, who are saying there are prudent things that we should be doing. And when we find someone who is spreading it community-wide, then we need to take, steps around those people. We're not calling for mass panic. No one, his public health officials are not calling for mass panic. But the president seems to be always putting a positive spin on it that is not realistic. It's almost alternate reality.
I think back to 2008, and I think back to George Bush, and I think back to President Obama, and the grave seriousness with which they comported themselves when faced with economies on the brink of collapse. And the other thing too important, cheap gas, well done, Mr. President, cheap gas. But what about your factory that doesn't have work because the supply chain has been corrupted and has been disrupted?
Or all the energy jobs are going to be lost.
Or you're closed down because the local movie theatre. I mean, yes, you're going to have cheap gas in your car, but you won't have much else.
The supply chain thing is real because there are concerns about there in the credit markets that you've got potentially hundreds of billions of dollars of bills that can't be paid because the supply chains are broken. So companies then turn to their lines of credit, and then they borrow the money, and then that goes back to the banks.
So one thing, this is key for the Fed, by the way.
Right.
Not on interest rates. Half a point on interest rates means nothing. This is key for the Fed doing their other function. They did it a year ago.
They did this morning, too. The New York Fed announced that it was in the repo market.
On the most basic level, when the circuit breakers are triggered for a layman, that sounds and feels really scary.
It is.
At this moment, should Americans be afraid?
Oh, not afraid. No, not afraid. They should be concerned, but not afraid.
On this day, exactly 11 years ago, I was terrified. We were all terrified because this was the bottom of the financial crisis 11 years ago. And from that horrible day, the green shoots of the longest recovery in history came. So, you also, regular people can't be market timers. If you sell right now, if it comes back tomorrow, you've just made a terrible mistake.
The core thing is, 11 years ago, however long it was, the fear of bankers and government was that some people would put their ATM card in and it would say, not today. There is no fear of that. There is no fear of that. And that comes back to, I think
there is a definite different type of fear, a real fear that is also setting in right
2008 is the economy going to turn off like a light switch? Today is, could there be a recession, and how narrow, shallow will it be? That's what the story
Europe
today.
is being forecast for sorry, I know you want to. Europe is being forecast for a sharp, deep recession. A recession in the US is not probable.